Well, hello, everyone. Welcome to today's training. We've got a lot of information we'll be covering here today. Excited to have everybody on board and getting logged in with us here. We're going to talk a little bit about assumable loans. We're going to talk a little bit about what you need to be doing to build your listing inventory, get you to a position you are generating a lot more listings for yourself. I'm trying to make sure I've got my everything live and rolled correctly. For some reason, it's not showing on my other computer here. But I've got a lot to cover. If you are a licensed real estate agent, you know this market has changed drastically. And we're going to talk a lot about why that is, what you should be doing, how you can generate the kind of money that you need to be making here by building your listing inventory. That's specifically what we're going to cover. Make sure you check in the chat. Let me know that you can hear me okay, as well as the city and state that you sell real estate in. So I think I've got my other side rolling for me here. Let me know exactly where you're watching from. Today, we're going to talk about how are we selling properties with 2%, 3% mortgages, 4% mortgages. We're doing it all over the country. A lot of my coaching members with Inner Circle Coaching, they're taking on more listings than they've ever had, and they're working with a lot more buyers than they've ever had. Of course, if you're offering something like this, you're going to pick up a lot of buyers. So that's going to be our topic. Welcome to today's morning meeting. I'm Greg Luther, the one guy that meets with you every single week to help you in growing your real estate business. And this one will get you growing very quickly. This is going to get you to a position you've got a lot more listings and a heck of a lot more buyers that you're working with. What you may not realize up front is every single FHA and VA loan in the world, in the United States, where they are, every one of them is assumable by law. Every single FHA and every single VA loan is assumable by law. And with rates the way they are now, let's call it 7%, give or take. It's probably going to go up a little more. It may go down a little more, whatever. But it just seems unaffordable to so many people that were used to the last few years where they were ridiculously low. So now they can't afford as much home as they used to be able to afford. Now that we're offering these assumable loans, it's making it much more affordable for them. They can get a lot more home for their money. I mean, think about it. If they're pre-approved right now at 6.5, 7, whatever the interest rate is at that time that they're getting approved, if they're approved at $500,000, they'll qualify for 800 or 900,000 on an assumable loan. If they only qualify to 300 and they're like, man, I'm priced out of the market right now and there's just nothing in my price range. Well, if they do an assumable loan, they're going to qualify. Same monthly payment, they're going to qualify for double that or near double that. So I wanted to walk through, I've got a whole bunch of notes I wanted to go through today because we are selling tons of properties this way. Of course, it generates a lot of questions for you, right? How in the world do we do this? That type of thing. I can say, I did a video about this yesterday that Realtor.com finally is doing something right. Because frankly, I don't like them very well. But Realtor.com is finally doing something very right in that they're advertising assumable mortgages. That's one of the things that they're advertising. As a matter of fact, I don't know if I have it. If I have it up here, I had a picture of it, of some of the ads they're running. You can now go to Realtor.com and you can search for homes that have an assumable mortgage under 4%. Now, think of how many buyers are interested in that. And of course, what they're doing is they're picking up all the buyers so they can sell them to us and take all of our money, right? That's their ultimate goal here. But the offer works. I mean, there's not a buyer in the country that wouldn't say, yeah, I definitely want to get a 2% mortgage. Of course, they're interested in that. So it's really a great offer. And if you're utilizing this, if you actually go out and you find those sellers that are willing to sell, because by the way, they can sell their home for more than market value if they're including the mortgage. Let me give you that again. Whatever your house is worth right now, I know you don't want to move. I know rates are too high. I know you got a 3% mortgage and you want to stay here forever. If I can get you a bonus, if I got you an extra 10 grand or an extra 20 grand, would you make a move? Because you're already selling at a ridiculously high price. You already have lots of equity. What if I could get you every penny it's worth plus an extra $10,000 by including the mortgage? Now you're able to get people's attention. I know that because it's what we're doing. We're doing it all over the country. So I wanted to kind of walk through this and talk a little bit about why that is. I want to stay focused on the listing side because for an awful lot of agents out there, you're looking for listings. You've got to build a better listing inventory. So if you get your offer right to get the sellers, and then that house that you have is not only priced right, but it includes a prearranged financing, of course, you're going to do very well with that lower rate. I've got one of my buddies, and I told this story to a lot of my coaching members. One of my buddies was able to get a duplex, and he acquired this home at 2.625. 2.625 mortgage rate. I'm like, dude, how did you do that? He's like, well, I just assumed the loan. I'm like, what do you mean you assumed the loan? So, like, you're just taking over the payments? He's like, no, you had to qualify. It was actually comes over to me. They have no liability, anything like that. And I've got, I think he said 26 years left on the mortgage. I've just got a 26-year mortgage at 2.625. What? How are you doing that? Now, this has been, I don't know, close to a year ago. So we started researching, started finding out why that is. And, I started having a bunch of my top producers like, hey, this is working well. If you talk to some of the old school realtors, some of the agents that have been doing this for a long, long time, they'll tell you that way back when interest rates were 12%, 14%, 16%, they'll tell you the only way they could sell a home was an assumable loan. That's the only way. They were doing lots of loan assumptions back then because that was a more affordable approach. Well, listen, we've realized now the feds are not reducing rates. They were supposed to have already done it 3 times by now. They've done it 0 times. As a matter of fact, inflation's not even under control yet, let alone need to go, inflation going too low that they would need to lower our rates again. It's simply not happening. So I think a lot of these buyers are starting to realize now that this is the rate. Like, if you're going to buy a home, you can only sandbag for so long. You've been waiting a year for them to reduce. You've been waiting a year and a half for them to reduce rates. You can't keep doing this. So they're realizing this is the new norm. Well, when we're offering these low mortgage rates, when we're offering, you guys remember the whole wraparound mortgage and blended rates and all of those terms we had to use back in the day. Well, listen, that is the new market we're in because people were so accustomed to 2%, 3%, 4% rates. We're nearly double, actually more than double some of those rates. So when you're offering this the right way, when you're going after the right sellers, and I'm going to show you that today, I'm going to give you some examples of this. When you're going after the right sellers, you're going to do very well. Well, so many agents are like, well, how do I find sellers? How do you get anybody to move right now? Nobody's wanting to move right now. No buyers can afford to buy. No sellers can afford to sell. This is what we're doing. You can go get a list of people that have assumable loans that bought between 2019 and 2022 because we know what their rate was. Nobody got an FHA loan in 2020 with a 9% rate. It didn't exist. We know what their rate was back then. So if I can get that list of people, they do have some equity right now. You got a lot of questions on how do we work the spread? What about the gap? All of that stuff. This is what we do. You're getting trained up on the right way to do this, but it's such a great way to start generating a lot more money for yourself. Let me see if I can share my screen. And many of you know I'm trying to figure out this whole YouTube thing to begin with. Let me see if I can get this to share for us. This right here is one of the list brokers that we use, Dataman Group, or maybe it's called Dataman, I don't know, but Dataman Group. If you go to datamangroup.com, you can see they have a list of FHA mortgages, and you can actually sort that. You can go in and sort that by when they bought the home, how much equity they have. I know if they bought FHA, they only put 3% down. They don't have a whole lot of equity. Now, those homes have appreciated since then. So there is a bit of a gap, and you need to have that gap because that's the only way you're going to get paid. A seller's not going to do this if they're bringing money to the table. So you need to have that gap in order to be enough equity there for them to pay you. So, this is something that can really do very well for you if you're going about it the right way. Now, let me see if I play around a little bit here to show you if this will. Yeah, so check this out. They've got all kinds of lists that you could use with your real estate business. If you're working baby boomers, if you're working those that want to downsize, if you're trying to work millennials or people that are getting ready to make a move, there's all kinds of different lists that you can utilize. But I really want you to think about, how are you marketing to these people? And there's a lot of mailing list brokers that are out there. So that gives you kind of an example there. Now, we can really narrow down when they bought, the type of home they have, the equity position they have, what their monthly household income is. We can break all that down. Another really good mailing list broker that we use Actually, I'm gonna give that tomorrow. I'm not gonna give it to everybody because we're public here, and by the time this YouTube is online, we're gonna have thousands of views over the next few days. I'm going to save that for tomorrow's training. If you're looking, and by the way, you can use Dataman Group. Anybody here can, but we've got a really cool source for taking your zip code that you're most interested in, finding those home sellers that own a home that they bought between 2019 and 2022. They bought with FHA or VA, which means they didn't put a whole lot of money down. And it's a perfect fit for the type of property we're looking for. We're not looking for somebody that has 700,000 in equity, which, by the way, if they had 700,000 in equity, they wouldn't still have an FHA loan. They wouldn't be paying the PMI and doing all of that stuff. So you don't want to create problems for yourself. Just go after the easy clientele, the folks that want your service, they want your help, and then you can help the buyers that are looking to make a move. We'll talk a little bit about that here in just a moment as well, because I really want you to get this part of it right when it comes to your marketing. The seller is, I've just wrote down some notes here for you to utilize this in your own business. The seller is going to be released of all liability and responsibility. Okay, so when they do a loan assumption, the buyer does have to qualify. And by the way, if they're already pre-approved at 7%, they're going to qualify at 3%. They're totally pre-approved. They're good, but they do need to qualify for it. And that loan is assumed by them, including all responsibility. I want you to write this down. We use what's called a novation assumption. You'll want to make sure that when you get to the closing table, that seller has a novation assumption, which means they are released of all liability. All, like the buyer later forecloses, that's their loan. It has nothing to do with the seller. So you want to make sure you're utilizing a novation assumption. I taught this entire system to our Inner Circle members about 3 to 4 weeks. Actually, it's been a month ago. So 4 weeks ago, I taught it to all of our Inner Circle members, and we're just doing boatloads of these deals now. I mean, agents are listing more homes than they've ever listed. We're getting these things done. And one of the key factors is to make sure your seller gets that novation assumption. Very important that you get that as well. But I give everybody the postcards, the email sequences, the Facebook ads, all of the stuff that they need. I'm actually doing a public training tomorrow on this. For those that are interested in that, we're doing it at noon tomorrow. We'll talk a little bit about that in a moment. But, just to show, let me see if I can share some things with you guys to kind of get your mind working in the right direction here on how you can use this. I think I can show you. I was going to try and show you this picture of one of the postcards. It's working very, very well for us. For some reason, I cannot get that page to pop. Oh, here we go. Let's see if this shows. We'll share screen, and you can take a picture of this if you want. This is the top half of the postcard. Well, it's kind of sharing in the screen. It looks a little weird there. Still learning the whole YouTube share screen thing. But this is the top half of the postcard that we're using, where we're taking that list. So let's say you go to Dataman Group and you market to those sellers. The top half of I'm not giving you the whole thing. I'll give you the whole thing on tomorrow's training, because that gives us a distinct advantage. All of the agents that learn how to do this the right way. Nobody else in your town knows how to do this. You want an advantage? No agents know how to do this. So the postcard says, sell your home at full market value plus get a $10,000 kicker. Did you know you can sell your low rate mortgage when you sell your house? You can sell your home at full market value, sell your low rate mortgage at a premium, and walk away with zero risk or liability. Now, who wouldn't be interested in something like that, right? So very, very simple to do. And I think you'll find that when you've got the right message and you can get it in front of those people, and you know how to do it, you know how to get them full price, you know how to get them the $10,000 kicker. You know, there's so many agents that are just sitting there trying to figure out, how could this not work? Why is my area different? Like I had somebody tell me the other day, Greg, lenders in my area. Dude, wait a minute. There are no lenders in your area. What are you talking about? We're dealing with servicers out of Washington, D.C., out of Seattle, Washington, that are handling a home in your area. They also have them in New Mexico and Florida and Kentucky and Idaho. What are you talking about? You're trying to find a reason to keep you from growing your own business. You're sabotaging yourself. It has nothing to do with where the home is located. It has to do with the servicer that's handling it. This is what we do. We have professionals that negotiate it. We don't even call the lender. Why would you ever call the lender yourself? You're a realtor. You're not an assumption negotiator. So we have professionals that handle that for us as well, so we can get them done in 45 days or less. There's agents that have tried to do this on their own, and it takes them like 3 months. I'm like, why would you're not even qualified to do this? You have no idea how to handle that. Use a professional to handle this. They're done in 45 days, no later than 60. But VA deals, they have to be done in 45 days now. It's mandated by VA that they must be done in 45 days. So it's getting a lot more streamlined nowadays. And one of the big advantages with this, like for everybody that's on tomorrow's training, I'm giving you the postcards, the sales letters, the Facebook ads that are getting these sellers, how you handle this the right way. But one of the big advantages is the buyers that you've worked with that are kind of priced out of the market right now, or they're only qualified to like very, very bottom of whatever the price range is in your area, and it's the neighborhoods you don't even want to show homes. They qualify for twice that at the lower interest rate. They could do a loan assumption with the same monthly payment, and there's only 26 years left on the loan. They can do that at nearly double the price. Instead of $350, they can go $600, $650. What a huge advantage you have in doing that. And you're providing a service for your community. You're helping home ownership. You're helping the issues that so many people are facing right now because you've gotten trained up on how to do this the right way. So if you know how to do all of this, you have a professional that's doing the negotiation for you. And I'm going to teach you all that stuff tomorrow as well. I'm going to give you access to them. They have all kinds of trainings on how this happens, what to do. By the way, the seller should never call their servicer. The agent should never call their servicer. This is done by the buyer. The person that handles this is going to get on as a third-party authorization. You have to go about this the right way or you're going to screw it up. So I'm going to walk everybody through that on tomorrow's training. It's not going to be a 20 or 30-minute thing like this here. It's going to be probably 3 or 4 hours to give you all the marketing tools, to show you how to do this, to get you set up the right way so you're closing lots of business. And you can not only sell the home, but you can include the mortgage. I think that's really the key factor to making this work for you. Now, we always get questions about, what about the gap? What about, let's say they only owe 500, but the home is worth 575 because it's been a year and a half since they bought, or it's been 2 years since they've bought, or whatever the case is. So don't they need the gap? Yeah. Do you think that's do you remember when rates were low? You paid $100,000 over asking price, and the vast majority of those were all cash. Do you think the people that had cash are broke now? Yes, this is how you do it. Yes, they're going to need to bring money to closing. Let me tell you right now, if you've got somebody that's even a conventional loan that's got 20% down, which on a $500,000 home would be $100,000, they would prefer to go FHA with only 26 years left on the deal and put the money up to cover the gap to get a 3% or even a 2.5% rate. Of course you can do that. Now, the company that we utilize that does the professional negotiations for you and kind of manages or coordinates that assumption, they also know which second mortgage companies work well with the first mortgage company. Because most first mortgages are only going to take certain people on their second mortgage. They're doing thousands they're all over Wall Street, or they're all over CNBC. They're all over Fox News. They've been interviewed by the Wall Street Journal. They're absolutely everywhere because they are the pros at handling these loan assumptions. And it's how deals are being done right now. So not only can they negotiate that whole deal, if the buyer does need the difference in the gap, they know who to go to in order to make that happen and still get it closed in a matter of weeks rather than months. If you can get this done in 45 days instead of 45 months that a lot of agents that don't know what they're doing, or they're trying to call somebody. Like if you call the servicing department, they are literally customer service. They don't even get a commission if this thing happens. Their sole purpose is to try and hang up on you so they can take the easy things because they don't get paid from doing this. Well, when you have a professional that's negotiating this, if the deal's not going the right way, they can escalate it. They can go to the manager. They can go to the VP. They have 3 different escalations that they can go through to get this thing done right now. So you don't get the runaround from an hourly employee that's just answering phones. Why would you call the servicing department? And yes, the training that we're doing tomorrow, I'm starting it at noon Eastern time, which if you're in California, that's 9 a.m. It's noon Florida time. And that's probably going to go 3 or 4 hours, but you will get the recordings as well. Those that are involved in it and become a member with that, you will get the recordings, the downloads, the examples, absolutely everything there. I'll talk more about that in a minute, but I want to keep training you here. The Facebook ads that you're running. If you tell a seller they can sell their home at full price, they are not interested. If you tell them they can sell their home at full price and get a $10,000 or a $20,000 kicker, yes, they are interested. We're finding a lot of, they can be going through anything. They might be going through a divorce. They might be getting married. They might have just had kids. They might have had a death in the family. Any life change creates a real estate change, right? So if we go after that list and we know for sure they bought this home between 2019 and 2022, and it is an FHA or a VA loan. You know what I know? 100% of them are assumable. 100% of them are at crazy low rates. Now all I have to do is have good offers so those that do want to make a move can make a move. And more importantly, they go with me. We have a professional deal with the negotiation. We handle all of this the right way. So now you know how to sell real estate in today's market. Now, I'll go ahead and give you the website here. I've got a lot more I want to teach you here, but I'll give you the website for those of you that are asking. I can see my text, my email, and even in some of the comments here about tomorrow's training. If you go to includethemortgage.com, and if my team's watching, and maybe you can drop the link in there, but it's includethemortgage.com. If you go there, you don't need to listen to the video of me at the top of it. You just go to the bottom and you sign up for it. It's $299. It's one payment. We're going to spend basically a half a day, 3 or 4 hours together, going through all the details of how to make this happen, giving you the tools that you need, and getting you making the kind of money you need. You need to get listings in today's market. Why not have them assumable? I want to talk about VA, by the way, because so many agents are worried the homeowner is going to lose their VA certificate and that type of thing. I want to kind of jump back into that. But again, that is on the page there. If you want to grab your spot, you don't need to listen to the video of me at the top. I'm already telling you what it is. But grab your spot down at the bottom. Let me see if I've got, if I can share my screen to show you. Here we go. Share screen. Maybe. Got to go back to that. See if that worked for us. There we go. So what you see here is the actual website. And again, you don't need to unmute me there. But if you to scroll at the bottom down here, this is where you're going to enter all of your information to grab your spot for tomorrow. And again, it's going to be at noon Eastern, but you will also get the recording. You can watch it over and over because I'm giving you resources. I'm showing you the people that negotiate these deals for you. I'm showing you how we do the novation assumptions. I'm giving you the tools that you need. So I do think you'll find that very helpful for you. But, so many questions come up as far as like, let's see if I can get back to my screen. There we go. So many questions come up like, what about the buyers? If they are not VA certified, if they don't have a VA certificate themselves, won't the seller lose their VA eligibility when that loan is assumed? Let me ask you a question. If I have a VA loan that's assumable at 2.5%, and I run an ad to all of the buyers out there that are VA right now that are pre-approved to 7%, do you think I can get one of them to do 2.5%, to do 3% mortgage? 100%. Like, what percentage of VA buyers do you think would say, nah, I don't want 2.5%. I'm already approved at 7%. I'm just going to pay 7%. It's not going to happen. So I'll walk you through that there. But listen, if you're doing a good job for your seller, you know how to get multiple offers from qualified buyers that fit exactly what that seller's looking for, exactly what that seller needs, so you can get that deal closed. I'll walk you through exactly how to do all of that. But yes, you should have someone with a VA certificate. There are ways around that, by the way, and we'll talk a little bit about that tomorrow. But you will have no problem getting multiple. They'll fight over the home. I want you to think about this. There's never been someone that's been able to buy a home at a 3% rate at market value. They've always had to pay 50,000 more, 70,000 more, 100,000. Like, do you agree? As tight as inventory is right now, if home prices went down, or I'm sorry, if interest rates went down, do you agree home prices would go up? Let's say rates went to 1% right now. Let's go crazy. Let's just say rates go to a 1% mortgage rate now. People would pay 150,000 over asking price and still get beat out. They would bring cash money and still get beat out. We saw that happening. Like, they could have got cheap money, but the market's so hot, they'd prefer to pay all cash. So when you've got someone with 70,000 in equity and you're like, well, wait a minute, how would we find the gap? Did you ever have a problem finding the gap before? What are you talking about? They'll bring all cash. Now, in this case, they don't need to, and they would actually prefer to get those low rates. I'll walk you through how you do that, but don't create problems in your own mind. That's like saying, the sellers 3 years ago, the sellers you were selling that were walking away with 500,000 in cash, they got equity of $500,000. They're like, I can't believe we made this much off of our house. This is amazing. We got $500,000. Were you worried about the gap then? People were bringing cash. It's not hard to find people that have money. So I'll walk you through that, but I got to get your mental mindset in the right spot. Just because you have a buyer that doesn't have money doesn't mean that's the buyer for that house. Maybe that's not the one that needs to be doing this. Maybe that's the one that has to pay 7% because they can't come up with cash any other way. The cool part about this, by the way, there are no appraisals. There are no closing call, your typical closing cost and origination fees and all of that stuff. You don't have that. So it's such an advantage for the buyer as well as the seller. I mean, you could sell this home at any price you want. There is no appraisal. The deal's already done. The loan's already in place. It's already got a lien on the property. It's already done. It's just someone else has taken over that responsibility. And they'll gladly pay over market value. They'll pay. How many times did you sell homes, the COVID homes? How many times did you sell COVID times where it was over appraised value? They're like, okay, we'll go find the money somewhere. I'll go borrow the money. I'll go cash out my 401k. I'll go see what I can do to find the money because I want to pay more than appraised value so I can get in on a home. That's still going on today. It's still happening right now. So I want you to get trained up on how to go about this the right way. This is where the money's at. You know what your other option is? To deal with sellers that don't want to sell, and there's no benefit to them doing so, and to deal with buyers that don't want to pay the higher interest rates or don't qualify because they've literally been priced out of the market. So their justification is, I'm going to wait till rates go down and home prices go down. You better pick one. Because if rates go down, home prices go up. How low do you want to go? I can actually sell you homes for $200,000 more than they are right now. If you want that low rate, how low do you want to go? We can buy it down right now. Because do you remember when mortgages were 2.5%? Homes were selling for $100,000 over. So there's certainly no problem. You only got to pay 10 grand over. You only got to pay 20 grand over. They're absolutely fine with that, as opposed to dealing with multiple offer situations right now, still paying over asking price. Like if you're buying a regular home at 7% right now, you're probably going to pay $10,000 over asking price. In an awful lot of areas, especially the FHA and VA price range, you are going to pay more than asking price anyway. And you're going to do that at 7%. So all the agents, nobody's going to pay $10,000 over ask. Really? Have you seen how the market works right now? So I think you'll find this to be incredibly helpful when it's done the right way. And when you understand how to handle that equity position, how to make sure the seller is protected, how to handle that novation assumption, make sure the buyer can get approved quickly. They have a professional that's doing this for them, not you. They have a professional that's coordinating this whole process. By the way, that professional charges 1%. There's no lender involved. There's no 1% origination fee. There's no appraisal fee. There's no closing costs. There's no doc fees, all the stuff that normal lenders would charge. There's no lender involved. we're going through the servicing department to make sure they're qualified to assume this mortgage. So buyers will jump through hoops like you've never seen. They don't care what it costs. And it's still a better option than what they have to do in the public market. It's actually in their best interest. The only way they can get screwed is to deal with an agent that's telling them they got to pay today's crazy rates and today's crazy prices and compete against today's other crazy buyers to pay over those crazy prices. That is not representing your client's best interest. Let's be honest here. Putting yourself in a category of one is how you win. Doing something that none of the other agents in your marketplace can do is how you win. I'm telling you right now, if you call 20 agents in your marketplace, they've done none of the assumptions. They don't know how to deal with it. They'll tell you all the reasons they don't even want to mess with it. Oh, it takes forever. I don't know who the servicing department is. I had a bad experience 77 years ago trying to do this. I don't know how the buyer would ever have the gap. They got all the, I don't know how, what if the seller's responsible? I tried a VA deal and they had their certificate. All the reasons they don't want to make money, and you can just crush it in your own market. We're all getting together at our coaching retreat. Our Inner Circle coaching members are getting together at the coaching retreat here in just a couple of weeks. There will be agents there that are crushing this opportunity. Listen, the seller wins. There is no question the seller wins here. They're getting more money than they would have got if they called RE/MAX, Keller Williams, Century 20, a normal realtor, their previous realtor. They're winning. The buyers are winning because the buyers are able to get a half price mortgage that only has 27 years left on it. So they're winning. You as the agent are winning because you're finally getting transactions. If you're sitting at home right now and you're stagnant, it's because your offer sucks. It's because nobody wants what you're offering. Like, that's not somebody saying something offensive to you. That is the facts. You see, nobody wants it. Nobody's taking it. So you have to fix that offer. This is a great way for you to do that. But, we'll go into, in the extended training tomorrow, we're going to go into that second mortgage option for the buyers that don't have the money. So they might need to do that, the blended rate thing. They might need to do a wraparound. They might need to do the second mortgage. But you don't want to be the one messing with that. Very simple. Send them to the processor. They handle everything. You just be a realtor. I want you to have the easy transactions. Okay. But essentially what we're doing is we're selling the house and including the mortgage. So I want you to write that down, by the way. That's really good copy for you to use. Sell your house and include the mortgage so you can sell at a much bigger premium. Okay. So anyway, that is going to be on Wednesday. We're doing that training that will then have the recording and everything for everybody that's there. I do want to be clear about this. I'm doing it one time. I'm doing it one time. If we max out on the Zoom capacity, you're not going to be able to get on. So you need to get your spot for this right now. If you go to includethemortgage.com, you can grab your spot for it. It's tomorrow. I'm doing it one time. I'm not planning to do it again because all of our agents are already utilizing this. So I decided I would help some of the public. Look, the market needs this right now. The buyers and sellers need this right now. So if you go there now, you should be able to click the link in the description there, or you can just type in includethemortgage.com. You don't have to listen to my video on there. I've told you today what we're doing here, but that will shut down as soon as the page is full for our Zoom participants tomorrow. It will be live. I will take some Q&A in the Q&A section there tomorrow. And then everybody that does have their spot, they're going to get the recordings. They're going to get the downloads, the marketing examples, the email templates, the conversion sequence, virtually business in a box. So you can start working these assumable loans and you can build your listing inventory. There's a reason to get these people to make a move right now. So I think you'll find that very helpful for you. Any questions you have, you can hit me up. You know how to reach me via email. I'll be there to help you out. But those that are on there tomorrow, this is going to be big for you. We've got a bunch of Inner Circle members doing this already. And I think you'll find that a lot of that stuff that I'm teaching is going to be very unique for you and your marketplace, and that no other agent even knows how to do this. It gives you the distinct advantage that we've always wanted to have. So start thinking about that to build your listing inventory. And again, you'll get all the details to attend live if you do want to attend live. I'm starting at noon Eastern, which is 11 a.m. Central Time, and then that's 9 a.m. Pacific Time out in California. But even if you don't like later that day or the next morning, you'll have all the recordings because you're going to want to watch this several times. I'm giving you actual Facebook ads. I'm giving you actual email sequences you can use for conversion. I'm giving you actual postcards that are working well to mail to these people. The website, the other website I want to give you, I think I showed you, by the way. Let me share with you here. This Dataman group that I just showed you, let me pull this up for you. FHA mortgage list. So this Dataman group that you see right here, well, I got my head in the way. Can I move my head? I can't. But you can see here, it says send postcards to that list. They will actually send it for you. I give you the postcard to use. They will send it for you. Now, the other website that I'll give you tomorrow, I think it's a better mailing list company. I think they do a better job. You can sort it better. You can really narrow it down to the most likely to make a move. And they will market for you as well. They will send that stuff out. So I'll give you all of that tomorrow. And that is going to be very, very helpful for you. No other coach in the country is doing this right now. They will all start copying. I guarantee you some of them's going to be on there tomorrow because this is what's working. Listen, let me start over again. Realtor.com is spending millions of dollars advertising this right now. If you see television ads of Realtor.com, they're saying, search our website to find assumable loans that are 2% to 3% rates. If you see their retargeting online, it's saying, search our website to find assumable loans where those homes are available at 2% and 3% mortgage rates. Cut your monthly payment in half. If it's good enough for them and they're spending millions of dollars to advertise it, it's the best bait you can drop in the water right now. It's how you build your business. I'm going to walk you through everything tomorrow. Appreciate you watching today. Hopefully it's getting your creative juices flowing a little bit here. We'll get you making some money. You should be utilizing this in your own business, whether you're on tomorrow or not. It doesn't matter to me. I'm doing this to help you guys out. But I think you should be using this for your buyers and your sellers, and frankly, for your own family, so you can make a lot more money on a monthly basis. This is the offer that distinguishes you from every other agent in your town. Other agents can't do this. So I'll walk you through that whole process. You'll see it then, and we go live at noon tomorrow. You'll get a link if you do join up, and you'll get all the recordings too. So check that out right now. IncludeTheMortgage.com, www.IncludeTheMortgage.com, and we'll plan on seeing you guys tomorrow. Thanks for joining today's morning meeting, and we'll talk soon. Bye-bye for now.